Hi, everyone, and welcome to Buffett and Beyond Research. And the stock we're going over this week is Caterpillar. And the big cat, yeah, CAT is the stock symbol. The big cat definitely has our attention. It makes big stuff. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And folks, talking about investing better than Warren Buffett, look at these compounded returns of the stocks in our 30 stock growth portfolio since 2002. Yeah, that's a long track record, and up almost 3 times that of the S&P 500. Just go to our site and sign up for the 2-week free subscription. All we need is your email. So folks, BuffettandBeyond.com. And what does Caterpillar do? Well, Caterpillar is the world's largest producer of earth-moving equipment. Big stuff. That's why they call it the big cat. Major global markets include road building, mining, logging, agriculture, petroleum, general construction, and products include tractors, scrapers, compactors, loaders, off-highway truck engines, pipe layers, and it also makes diesel, natural gas, and turbine engines. Foreign sales, 59% of total. So yeah, folks, it's an around-the-world company. So let's look at the statistics of this company, and the blue vertical lines represent the average stock in our database, and the green is Caterpillar. So you can see that in all three, let's start over here, revenue is about the same as the average stock. However, when we look at the net income, Caterpillar definitely brings more to the bottom line than the average stock. So it's operating much more efficiently, which is why it's outperforming the S&P 500, which we'll see in a second. And the clean surplus return on equity, think of your bank account. Would you rather put your money in a bank account that's giving you 13.5%? or a bank account that's giving you 16%. So that's how you measure the clean surplus return on equity. Think of your bank account. So when we look at the numbers, and I just want to show you something here, net income, which is the clean surplus earnings, has gone up since 2020 during COVID. Yeah, everything slowed down and stores were closed, but it has been rising. The earnings have been rising each year since then. And when we look at the return on equity, think of your bank account. This is the 3-year, this is the 5-year average, and this is the 10-year average. We can see that over since 10 years ago, then to 5 years ago, and now to 3 years ago, the average return on equity, or the average income of your bank account, or interest of your bank account, if you bought Caterpillar, Caterpillar, you would be rising, and the market likes that, folks. So the ROE has been rising. Retention rate, next year it's going to put about 74% of what it's making back into the company in order to expand. That's a good sign. We'd like to see that. Now, the years to pay debt, about 4.2 years. That means if the company takes all the money it's making, puts it back into itself in order to pay off the debt, it could do it in 4.2 years. Buffett's rule of thumb is he wants to see 5 years or less. And we'd like to see 3 years or less, so the years to pay debt a little bit high for us, but it has a nice dividend. So when we look at the 1-year returns, black line is the S&P 500. So over the past 1 year, that's 12 months, S&P is up about 8%. This stock is up about 55%. Look at this. That's absolutely amazing what it's been doing. That's because it's operating so efficiently. And then when we look at 5 years, well, it was kind of following the market. Again, the S&P is the black line. And then all of a sudden it took off after 2022 because that was the year the market went down last year. And boy, it has taken off. Came back down a little bit, and then the new earnings that just came out, and that's why we're going over this stock today, is because the earnings came out just recently, and a lot of people emailed and said, what about Caterpillar? Should I buy Caterpillar? Well, folks, it's doubling the S&P 500, almost doubling the S&P 500 over 5 years. Now, here it is up 115% with the market up a tad under 60%. So just about doubling the S&P 500 over 5 years. So, folks, we can see Caterpillar, yeah, it's a better than average stock, no doubt about it. And remember, the average stock, the S&P 500 is considered average, or the averages, and 96% of professional money managers who manage the publicly traded mutual funds cannot outperform these blue vertical lines, and Caterpillar is doing it. Okay, folks, that's it for this week. We'll see you next time. More stocks, and if you go to our 2-week free subscription, you will see more of these stocks, maybe 2 or 3 during the week. So folks, sign up for your 2-week free subscription, and we'll see you next time.